Accounting Lesson 28. Topic: Financial Statements. Income Statement. Analysis and Interpretation. Turn to Lesson 28 in the Learner's Workbook. This lesson includes an individual activity and a group activity with formative assessment. Integration. The purpose and form of financial statements and their analysis and interpretation explored in this lesson integrates with all the knowledge you have gained throughout this Grade 10 accounting course. Prior knowledge. You have prior knowledge of the purpose and form of financial statements and their analysis and interpretation from exploring these concepts in your Grade 9 accounting course. Lesson overview. In this lesson you will know that financial statements should be comparable one year to another, understandable so there is no confusion, reliable so that there is faith in its accuracy, fair and not favour one particular group of people, timeously issued.
Good day, welcome to our Grade 10 accounting lessons. We're now on to a section where we're going to put everything together in terms of the adjustments, in terms of the final accounts that we have discussed. And what we're going to now do is we're going to show you and we're going to talk about financial statements.
Welcome once again to one of our Grade 10 lessons. Very important what Ashraf said, that you don't see what we're doing today in isolation. So all the other lessons that we've done is a build up to what we're going to do today. And it's all about, remember, we kept on saying revise and do adjustments. So those adjustments is going to be applied when we're going to complete the financial statements.
Now, what are the desirable characteristics of financial statements? We learned that accountants are eligible to become members of a professional body. For example, the South African Institute of Chartered Accountants or the Institute of Commercial and Financial Accountants Standards. Now, this is important. Why? Look at this.
If we look at the following, very important what Ashraf spoken about, there's certain bodies that's concerned about these financial statements. So we've highlighted now the South African Institute for Chartered Accountants. Now these bodies they regulate and conduct the accountants who are eligible to be the members of the organization. The public thereby gain assurance of the quality of training, the performance and ethics pertaining to the accountants in the public practice. These bodies are also responsible for providing guidelines to the members on procedures, and this is referred to as GOB. Now, we've spoken about this a lot. Remember, we said it's not a person walking on the street. There were certain principles that we have to adhere to. So one of the guidelines relates to the preparation of the financial statements, and this is to ensure that they meet the certain minimum.
Now, these financial statements, what are they all about? Remember, we did the year-end procedures, and we could summarize them as follow. A pre-adjustment trial balance is prepared. Journal entries for year-end adjustments are recorded and posted to the general ledger. A post-adjustment trial balance is then prepared. All of this is old hat to you. Remember, in our previous lesson, we actually showed you a diagram concerning all of this. Closing entries are recorded in the general journal and posted to the general ledger, and a post-closing trial balance is then prepared.
Now also, when we did the closing entries, we posted this to the general ledger. So what has happened there was we took all the nominal accounts, we spoke about the income and expense accounts, and we closed it off to two new final ledger accounts, which was the trading and the profit and loss account. These accounts are prepared in the final account section of the general ledger. In the trading account, we calculated the gross profit as determined. We said it was the sales less the cost of sales. While in the profit and loss account, we transferred the net profit, we added the income, and we subtracted the expenses, and this resulted into a net loss, either into a net loss or in a net profit. The balance account section remained open, and that was recorded in the post-closing trial balance. So what that basically means was that the post-closing trial balance only consists of balance sheet, no drawings, because we closed off the drawings to the capital account, if you can remember from our previous lesson.
Your financial statements, therefore, consist of an income statement and a balance sheet. The information contained in the income statement is identical to that shown in the final accounts, namely the trading and the profit and loss accounts. Whilst these two accounts are prepared in T account format, the income statement is set out vertically in an easily understood format. It does not have a debit or a credit side and can easily be read by a person who has no formal training in accounting. The information contained in the post-closing trial balance is recorded in a balance sheet.
So basically, to summarize that, it's what we're basically saying, that the trading and the profit and loss account is now basically, it's a replacement the income statement. We're calculating the same thing, gross profit and net profit, in the income statement. And what we're doing with the post-closing trial balance, we represent that now in the balance sheet. So the financial statements contain exactly the same information, like I've just said, as in the final accounts, and the post-closing trial balance are drawn up and shows a certain additional information in the form of notes, which simplifies, and it's the analyzing and the interpreting of these financial results for the accounting period. And the information contained in the post-closing trial balance is recorded in the balance sheet.
So who are the users of these financial statements? What's the purpose of these financial statements? Always remember, whatever you do in accounting is done for a purpose. So who are the users? Number one, the owner, who needs to see how well his business is doing. The financial statements enables him to determine if his investment in the business is profitable enough for him to continue operating. Potential buyers need to know the profit or the growth of that particular business. Creditors will obviously grant credit to a business. An examination of the financial statements will enable suppliers to establish the creditworthiness of the business, that is, the ability to pay its debts.
Those are not the only people that's interested in this financial statements. Let's continue. If we look at banks, if you want to apply for a loan, then the banks will want to have a look at those financial statements. So banks and other lending institutions use this financial statements for the granting of loans in overdraft. SARS is interested in that. That would be for income tax purposes. The manager or the senior personnel use these financial statements to make certain financial decisions. So the employees and the trade unions also use this information contained in the financial statements as a tool to negotiate wages or to increase or improve the working conditions.